While crypto headlines are dominated by coins, ETFs, and big-name miners, one under-the-radar stock is building the infrastructure powering not just blockchain, but the future of AI and Web3. The company, Applied Digital, trading under the ticker symbol APLD. Unlike traditional crypto plays, APLD doesn't mine coins or develop tokens. Instead, it builds and operates the high-performance data centers that support Bitcoin miners, AI workloads, and decentralized technologies. In essence, it's becoming the digital backbone for the next generation of computing. And the timing couldn't be better. As demand for compute power explodes and institutions chase scalable infrastructure solutions, APLD's expansion is accelerating. With strategic moves into AI, massive capacity rollouts, and growing investor attention, the stage is set for a potential breakout. In today's video, we're unpacking why APLD could be the next major infrastructure stock and why savvy investors are paying close attention before the surge. Applied Digital operates a unique business model centered around infrastructure. It's not involved in token speculation. It's building the power and compute infrastructure that powers blockchain, AI, and Web3. This dual revenue model, supporting both crypto and AI clients, makes APLD a powerful picks and shovels play. Unlike miners who face revenue swings tied to Bitcoin prices, APLD generates recurring income through long-term contracts, while its ownership of land, power access, and facilities provides cost control and margin leverage that traditional colocation providers can't match. At its core, APLD offers hosting services to Bitcoin miners, managing everything from power and networking to facility operations. With purpose-built data centers in locations like Jamestown and Ellendale, North Dakota, miners outsource their infrastructure needs to APLD, enabling them to scale without owning physical assets. Applied Digital is scaling up its infrastructure rapidly to meet soaring demand. In Garden City, Texas, its 200-megawatt data center went online in October 2023, marking a significant chunk of its planned 480-megawatt blockchain hosting capacity across North America. Meanwhile, in Ellendale, North Dakota, the company runs a 180-megawatt crypto hosting campus and is now building a 100-megawatt HPC facility. This new wing is part of a broader plan to reach 400 megawatt in AI HPC capacity alone. The vision doesn't stop there. CEO Wes Cummins has outlined a gigawatt-scale roadmap, aiming to develop campuses that can support up to 1 gigawatt of IT load by the early 2030s. With major clusters in Texas and the Midwest under development, Applied Digital could add hundreds of additional megawatts by the end of the decade, and institutional clients are already locking in. A recent 250-megawatt lease deal with CoreWeave, a GPU cloud company backed by NVIDIA, is projected to bring in $7 billion over 15 years, with an option for an additional 150 megawatt. That announcement alone triggered a 40% jump in APLD's stock price. The takeaway? With massive expansion plans, strong client demand, and long-term revenue visibility, APLD is positioning itself as a key player in digital infrastructure. While crypto hosting remains foundational to APLD's business, its pivot into AI infrastructure is emerging as a major growth catalyst. In early 2023, the company launched Psy Computing, kicking off its AI journey with a 5-megawatt HPC facility next to its Texas site. These data centers are engineered specifically for high-density, low-latency AI applications, unlike traditional facilities that struggle with such workloads. With companies like NVIDIA posting record-setting data center revenue, the demand for purpose-built AI infrastructure is only heating up. And APLD is one of the few companies offering the kind of scalable, ready-to-lease capacity that hyperscalers and AI startups desperately need. The $7 billion CoreWeave deal, secured in mid-2025, underscores the confidence major players have in APLD's infrastructure. Beyond financials, this signals a long-term role for Applied Digital in the AI revolution. Even more compelling is the balance this strategy brings. Crypto markets are notoriously volatile, but AI hosting provides higher margins and more stable demand. Diversification like this makes APLD more resilient, positioning it to benefit from multiple megatrends without being overly exposed to one. In the first quarter 2025, revenue jumped 67% year-over-year to $60.7 million. Adjusted EBITDA more than doubled to $20 million, and net losses narrowed significantly from $11.5 million a year ago to just $4.3 million. The company's cash reserves climbed to $86.6 million, giving it flexibility to support future buildouts, even as total debt stands at $143.6 million. Importantly, institutional backing is strengthening. Over 65% of APLD shares are now held by major institutions, including PNC, US Bancorp, and Charles Schwab funds. Hedge funds have also increased exposure, signaling broader confidence in the company and crypto infrastructure potential. Analyst sentiment remains bullish. TipRank's analysts rate APLD a strong buy, with average price targets around 14.56% to about 46% upside from current levels, and some expecting prices to hit $18. So what makes APLD such a compelling investment right now? First, it's undervalued relative to peers. Despite sector-wide optimism, AP's market cap remains around $1 billion, leaving ample room for re-rating as contracts scale and margins expand. Reports from Seeking Alpha and Nasdaq highlight APLD's strong vertical integration and superior scalability compared to companies like Core Scientific. Second, its asymmetric upside is powerful. With a small cap and multi-gigawatt expansion plan underway, even modest improvements in utilization or pricing could deliver oversized returns. And the company's leverage to both crypto and AI megatrends gives it more paths to success than most single-focus infrastructure stocks. Third, its infrastructure-first model makes it uniquely positioned. While many chase the next hot AI chip or crypto token, APLD is providing the foundation that enables those technologies to function at scale. It's not just riding the wave, it's laying the track. Of course, no stock is without risk, and APLD has a few investors need to weigh. The company's exposure to crypto miners means hosting revenue can still fluctuate with Bitcoin prices and regulatory shifts. Additionally, building large-scale data centers is capital-intensive and can be delayed by permitting, power access, or supply chain issues. There's also the risk of dilution. While APLD's cash position has improved, ongoing expansion may require more funding. If done via equity, it could dilute existing shareholders. If debt is used, interest costs could weigh on margins if growth slows. Investors should understand that APLD is a high-growth, high-risk play, but with that comes high-potential reward. So, is Applied Digital still under the radar, or is it about to become one of the hottest infrastructure stocks of the decade? With massive growth in hosting capacity, an aggressive move into AI compute, a $7 billion CoreWeave contract in hand, and rapidly improving financials, APLD is building something big. It's no longer just a crypto hosting firm. It's an infrastructure powerhouse, bridging two of the most transformative tech sectors, blockchain and artificial intelligence. If management continues executing and demand for compute keeps rising, this stock could move significantly higher and sooner than many expect. So the real question is, are you getting in before the surge? If you found this breakdown helpful, smash the like button, subscribe to Stocks Telegraph, and turn on notifications so you never miss an update. And let us know in the comments, what do you think about APLD's growth story?